right now we're going to go to the tension that we see on Bloomberg Surveillance. A number of analysts we've spoken to really speak about weak yen, strong dollar. Marvin Barth at Barclays flat out disagrees and looks for strong yen, weak dollar. Is that right, strong yen, or is it on a partial differential? Is it about a weak dollar?
It's much more about the strong yen rather than the weak dollar. We have a stronger dollar across the board. There's a few key points here. One, the yen continues to be one of the most undervalued currencies out there in long-term purchasing power parity terms. The second is that increasingly it demands a greater share of global asset allocation for its correlation benefits, not its yield benefits, because it is such a great hedge on risk, particularly in the current environment. And finally, let's remember that while we often think about Japan as this laggard, on a per capita basis, it's actually been one of the strongest economies in the world over the last several years.
Why have we then seen the yen drop to its lowest since January? And actually, I'm looking at the Bloomberg, and you're absolutely right, Marvin. On a purchasing power parity basis, the yen most undervalued, apart from the Swedish krona. Just nice little factoid there.
How do you do that?
WCRS, I'll bring it up here. I'll put it on the screen. Anthony can take it for us, and everyone can have a look at how undervalued the yen is, according to Marvin Barth.
Everybody can have a look at how dumb I am with my terminals. I got to come over here to see Naira. You know, we wouldn't show that on TV because it's like a mess. But
that's why I just
it's a lot of information.
Yeah, it is, and it's great, and it supports what Marvin Barth was saying. But then why other investors not following what you're saying, Marvin, and pushing the yen to its lowest since January against the dollar? Is that just about dollar strength?
Well, I think it's two issues here. One is that if you look at dollar yen and U.S. yield differentials with Japan on a high frequency basis, it looks like they're highly correlated. So if you expect U.S. yields to go higher, you should expect dollar yen higher. But if you look at it on a lower frequency basis, actually dollar yen has been going the opposite direction to the U.S. yield differential. That's that valuation play coming through. The second is, I think it's a bit of momentum chasing here. We had a big mergers and acquisition move come through very illiquid markets last week, pop dollar yen higher. Everybody thinks this is the big move. I'd fade it.